Hi, I'm Sharon Winsmith, a tax attorney, active investor, and your go-to resource for proven investment and tax planning strategies. In this video, I'm going to give you a really quick intro on finding good deal flow for alternative investments. What I mean when I say alternative investments in this case is investment funds. So all types of investment funds, from real estate funds or syndications to debt funds, venture capital funds, private equity funds, any type of fund where you are a passive limited partner investor in that fund. So I'll start by telling you a little bit about what fund managers and sponsors do and how you should think about finding good quality sponsors. And I'll give you some tips to watch out for so that you don't get yourself in trouble. But I do want to start by saying that I do have a course that tells you my process for how to, how I find good deal flow. I highly recommend you check that out. What I'm not going to do in this video is tell you what to invest in. You should never listen to somebody who says this is an investment you should make. You need to understand how to do your own research, get a good pipeline for good quality deals, how you can get access to those deals. So if this is something that's relevant for you and you're an accredited investor or higher, qualified purchaser, I highly recommend you check out that course where you can understand my process. And it's a process that you yourself can use as long as you're an accredited investor. You are, welcome to use that same process that I use. So I want to start by telling you my most embarrassing story around making an investment fund. So when I first started, I had no clue what I was doing. And I decided, real estate sounds great. I don't want to go buy property. So let me invest in a real estate fund. So I didn't know what I was doing. I didn't know anything about, finding sponsors. I thought, someone like me is just an average Jane. How could I ever find really good sponsors to invest with? So what happened is I read at some point in my, early in my entrepreneurial journey, I read a book that was a life-changing book for me. And I just became kind of obsessed with it and that mentality. So when I started reading, all the other books that author had put out, and I started looking into the advisors that author had used. So that author had a bunch of advisors, from real estate to CPAs to attorneys. And I started just digesting any information out there that anybody in that team or that network was writing or putting out. And I was really paying attention to one of the real estate guys. And so I read a lot of his books. I listened to his podcast. I thought, this guy's great. He seems to really know what he was doing. And I was amazed to find out he actually had a fund. And I was even more amazed to find out that I could invest in that fund. So I thought, this is great. Let me, invest a bunch of money with this guy. And, how could this not turn out well? So it was actually a really bad, decision. I didn't know what I was doing. The fees that they were charging were astronomical. They didn't have a good background. They don't have a good reputation. And it's clear that, that the manager of that fund has his focus elsewhere. He's really more of an influencer than, a fund manager. So, once I did find out a good quality process for how to find good, quality sponsors and good deal flow to invest in, I was really embarrassed that I had made this first investment. So I've never told anybody the name of the fund. I'm still embarrassed to say it, but hopefully by sharing this story with you, I can help you avoid these same mistakes. So it's a rookie mistake a lot of new investors to investment funds make. You hear a podcaster or YouTuber, or someone, you read a book or something and you think that, this has to be good. Let me go invest with this person. That's usually a bad idea. And I'll explain more in this video later about why that is. But to start with, I want to explain that finding good deal flow is a combination of quality sponsors and good deals. So you start with, and I dive into this in my course in really big detail. You start with step one, finding good quality sponsors that you want to invest with. So what is a sponsor? You may hear them referred to as sponsors, fund managers. They have a lot of different terminology, but this is basically the team or person, who puts the deal together, and they're going to manage those investments. So you're a passive investor. You don't make any decisions as far as what investments the fund makes, when they make them, how they manage those assets. If it's real estate, you may know you probably know like what properties you're buying, or the fund's buying, but you're not going to really know about the day-to-day operations and, what's taking place. That's all handled by the manager. So the fund manager manages the fund. They market the deal. So they're the ones that pull in other investors. So you and I and anyone else who wants to make an investment in that fund, they go out, arrange everything. They're the general partner in the fund structure. If you don't know what that is, I cover that more in my course and in other videos I have. They decide what investments the fund will make. So as I said, in a lot of cases, it'll be a fund where you don't necessarily know what assets they're going to buy. You should know a strategy that the fund's going to undertake. So in some cases, you may know what properties are going to buy, but usually with a fund where they're going to buy multiple properties, you probably don't have any clue what properties they're actually going to end up buying. So they make all those decisions. They determine when they're going to buy, and when's the fund going to buy those properties? When's the fund going to sell those properties? They may manage the assets themselves on an operation level. So a lot of fund managers will have a property management entity that's separate where, that entity is managing the day-to-day properties. So they may, you may buy an apartment building in Georgia, for example, and there may be a property management company that's owned by the same people who own the fund, or who, really the same team that's the sponsor. They're in charge of managing the building itself, getting new tenants and, doing renovations, all that kind of stuff, the day-to-day operation. So that's very common, if it's private equity, they may manage or have some active management in the portfolio companies themselves by having someone on the board or, dictating who the management team is going to be in different ways. But you as the passive investor, you're not going to have any control over that. So you are really trusting your money over to that sponsor or fund manager. So that is why it's so important. Step one, finding a quality sponsor. Don't make that mistake I did where you go after the podcaster and, invest in him. If a good quality sponsor that's been doing this for a long time doesn't need to market that way, and they don't need to, they're not trying to be an influencer, they're not trying to do a lot of other unsavory things that this guy was doing. And, so you want to make sure, step one, you find good quality sponsors. Then once you find those sponsors, you've got to then see what deals they have. They will have deals that you can invest in. In a lot of cases, they have one or more deals a year. So you just have to decide, okay, I like this, you don't ever just want to go with one sponsor. You want multiple sponsors. I invest with 20 probably different sponsors at least. So you want to, say, okay, sponsor X that I really like, they have, these deals. Do I like those deals? What are those deals do I want to invest in? So you want to have your kind of bucket of quality sponsors, and you want to be aware of, what deals are available when they come up, for you to invest in. I just want to end with a couple of tips. So these are really words of wisdom from my own experience, as well as my experience of working with other people and just kind of, knowing a lot of people in this space. So, I'm very much into with, the investor groups and, who invests in some of these bigger deals and stuff. So this is based on my experience personally. This is based on my experience talking to other people who do this a lot, and based on my experience when I used to have a tax consulting firm where I worked with clients that were doing this. So friends and family, a lot of people kind of invest or start with investing with friends or family. This might be, cousin Bob comes and says, I want to go buy an apartment building. Can you give me $100,000? You and a couple others put some money in. I don't do that. I have a blanket no friends or family policy. I personally only like to invest with really big quality sponsors that are big, have been around a while, have a proven track record. So just be careful. I'm not saying don't do it. I would never tell you what to invest in or what not to, but just be very careful. You want to be, much more cautious with those types of investments because it's an amateur, right? If they had access to a bunch of investors or a bunch of money, they probably aren't coming to you. So just be careful of that. I only look at funds, and I'm talking about investment funds. Anybody can go out and buy real estate property themselves. I'm talking about investing passively through an investment fund. Those are always, in my experience, good quality sponsors always limit their investment fund to accredited investors. So if you are not an accredited investor and you want to invest in a fund and you find something, that allows you to invest in that, I would be very cautious, very wary. I would do extra due diligence on that. My course on this topic is limited to only accredited investors because I think it's useless if you're not at that level yet. And that's okay if you're not, you'll get there. And when you are, then take my course and you can start using that process to find your own deal flow for funds. But until you reach that level, if there's an investment out there that's not limited to at least accredited investors, a lot of investments are limited to qualified purchasers only. But if it's not at least limited to accredited investors, I'm not touching it. That's my own personal opinion. Paid ads. Sometimes I see, social media, I'll get like Facebook ads for funds and stuff that are advertising. I stay away from those sponsors. A good quality sponsor shouldn't be having to do paid advertising. They should have investors knocking at the door. The best sponsors I know and that I've invested with and have a good quality track record, they have no issues raising capital. They usually raise too much. They actually have more of an issue of raising too much capital that they have to turn people away. So be very wary of that. Why are they having to do paid advertising? Why don't they have their own, good investor base if they've been around and done a good job for their investors in the past? Crowdfunding platforms. I know these are getting very popular, like Fundrise. I don't touch these. I will say that the people I know who really understand this business agree with that, thought that these aren't good. good quality sponsors aren't putting their deals on there. So again, I would be very wary of that. And, you know, just, I wouldn't touch it. I have a blanket no crowdfunding platform policy. Be careful of unsophisticated groups. So there's these things nowadays, it's like really cool to be in an investor club or network. So I know there's all these investor clubs popping up. Be very careful with that. Yes, there are some really good investor clubs that can give you access to deal flow, but there are some really, really bad ones. I have seen situations where, you know, you get these investor clubs that aren't very sophisticated, and you've got, you know, that herd mentality where they all invest with a one sponsor, and that sponsor is really bad. I know investor clubs where they're mostly invested with a sponsor that is in really bad shape right now. So you've got to avoid that. You got to, you know, avoid those clubs where it's like a herd mentality where, you know, everybody in the club's investing with this sponsor or that sponsor, because you better hope that's a really good sponsor, because otherwise you might be, you know, getting yourself into trouble. And if you're in this group think, you know, environment and everybody's saying, oh, this sponsor's great, well, you're going to think that too, and you're going to invest, and it might not be a good sponsor. So just be careful with these groups where you've got a lot of unsophisticated people either running them, or, you know, members, or, you know, founders that are trying to profit off of their members in a way, or connected somehow to a sponsor. I would stay away from any group or investment where, you know, there's someone connected to somebody and getting paid for that. So that, you know, just has obvious incentives that don't align with your interest there. This last one is the best advice you will ever get. As far as when you're looking to invest in investment funds, it will help you avoid the rookie mistake I made. It will help you avoid the same rookie mistake a lot of my friends have made. Just don't invest with people who have a podcast, a YouTube channel. And this is coming from someone who has their own YouTube channel. Don't invest with people who are podcasters or YouTubers. They do not have the right focus. They are I'm not trying to be an influencer. I'm trying to be a thought leader in this space. But if you're out there, you know, running an investment fund as your day job, but you're spending more time on your YouTube channel or podcast, you know, you don't have the right focus. And again, it's just not really how that industry works. Good quality sponsors, they might be guests on, you know, a show or something every now and then, which is great and fine, but they're not running their own podcast. I just think that, you know, in my experience, I've only seen people get in trouble by investing that way. There'll be a podcast, you know, where the podcast host is the fund manager, one of the fund managers, or the podcast host is, you know, affiliated with the fund. Be careful. You might not always know that they're a principal and they're part of the general partner, even though they're not like the CEO or, you know, the big person at the fund. So watch out for that. There could be some affiliation that you're not even aware of. So a lot of sleaziness in the space. Watch out for it. You know, being able to invest in understanding and access to quality sponsors was such a game changer for me. I would say it's probably one of the top 5 reasons I've been able to achieve financial freedom early in life. I cannot speak enough about how lucky I am to have access to really amazing quality sponsors. I find it a privilege to be able to invest with them. I trust them. They've done, you know, great job for me as far as returns on my money. So I feel very thankful. And again, check out my course as far as my process if you want to understand that more in detail. I'm not going to tell you what to invest in, but if you're a credit investor, it's a great understanding for you to get a good pipeline for good future deal flow. So hopefully you found this video helpful. If you did, please like the video and subscribe to the channel.